with caution, but there are those who believe this is just the beginning of a period of intense pain, at least in the short term. CNBC TV 18's Navin, Shetty and Alexander Mathew sum up the contrarian view.
The bulls have not just been caged, they're broken and bleeding. With benchmark indices down 18% from the all-time high hit a year ago, they're just 2% away from a so-called bear market phase. Adding insult to injury, some experts believe the ongoing earnings season may not bring much comfort. Hence, the inference in some quarters is that the pain is going to continue in the near term, and the stock markets may be in for a further cut of 10%.
The point that I made on your program back in August that we should be bracing ourselves for Sensex 22,000 is I think something I would like to reiterate. Sensex 22,000 is where I think we will become more positive about India. Clearly, to get from here to there will be more incremental bad news.
This would leave markets trading at a price-to-earnings ratio of 14, a level last seen immediately after the Lehman crisis in 2008. This view is bolstered by the belief that the already muted capital investment cycle is not going away anytime soon. The argument is that with only 15% of India's total capex coming from the central and state governments, the onus of reviving the investment cycle will fall on the private sector, which is already struggling with over-leveraged balance sheets. Meanwhile, banks which hold a 33% weightage in the broader index are reeling under the burden of stressed assets. In some cases, stressed assets even overshadow the bank's net worth. And that's not good news for sectors like banks, infrastructure and real estate.
I think we should be bracing ourselves for a meaningful drop in GDP growth, nominal GDP growth and real GDP growth. So economy is weakening, banking sector, which is the heart of the economy, 34% of the market weakening.
Here's another reason for this concern. So far this financial year, foreign investors have sold equity worth over 20,000 crore rupees. And unless the economy shows signs of a revival soon, this figure may not go down. So unless something changes drastically to give investors positive triggers to latch onto, investors will have to brace for some more pummeling. In Mumbai, with Navin, Shetty, Alexander Mathew.